Ladies and gentlemen, good day and welcome to HIL Limited Q4 FY21 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Rangnekar from CDR India. Thank you, and over to you, sir.
Thank you, Steve. Good afternoon, ladies and gentlemen, and welcome to HIL Limited's Q4 and FY21 results conference call for investors and analysts. Today we have with us Mr. Dhirup Roy Choudhary, Managing Director and CEO of the company, Mr. K.R. Veerappan, CFO, and Mr. Ajay Kapadia, Assistant Vice President, Finance and Accounts. We will first have Mr. Dhirup Roy Choudhary make the opening comments, and he will be followed by Mr. Veerappan, who will take you through the financial perspective. Before we commence, I would like to highlight that some of the statements made on today's call could be forward-looking in nature, and details in this regard are available in the earnings presentation, which is available on the stock exchanges and the company website. I would now like to invite Mr. Dhirup to come forth and share his perspectives on the performance and strategy. Over to you, Dhirup.
Thank you, Siddharth. Good afternoon, ladies and gentlemen. Welcome to the Q4 and FY21 earnings conference call of your company. I thank you all for taking out this time to join us on this call and hope all of you are safe. During the last 4 years, we have redefined our vision, mission, and core values and are in the process of transforming your company, HIL, into a global one-stop building material solutions company. Dependency on revenue from asbestos business has been reduced significantly. We have grown 3x in top line and 4x in operating profitability in the last 4 to 5 years. Working capital percentage to revenue in India has been extensively reduced from 23% in FY16 to 5% in FY21 using lean manufacturing and financial astute policies. Well-planned digital roadmap execution in initiatives like IoT 4.0 in many of the factories, Ariba, RPA, Digital Customer Connect, Power BI, host-to-host banking, lead management, idea management, AP workflow, planning and budgeting tool, etc., have all been implemented from time to time towards creating a more efficient workplace. Exceptional employee connect and treating our One HIL colleagues as our biggest asset has helped to improve employee engagement score significantly from 54% in FY16 to 86% in the last year, FY21. I personally complete 4 years with HIL this year. Last year has been a year of transformation for your company, where the organizational structure, processes, customer connect, costs, and overall sustainability has been challenged towards creating a new, more efficient HIL. Let me first speak about the roofing solutions segment. We closed last year very well once again, emerging as number one with a good lead in market share. While this second wave seems to be penetrating into rural sector, which threatens our business this quarter, as an organization, we have learned immensely from last year on how to manage this crisis. The team has come together in building a robust process in sales acquisition by digital mapping of customers, heat maps, BI models, and pin code mapping, where 712 tehsils have been mapped. The organization has become far more agile in identifying greener pastures and immediately rerouting its entire energy on a daily basis to areas where the business potential can be managed and reached. We have also seen that securing 1,200 additional counters from our competition roofing last year, we have become far better in penetrating and converting a customer push, a distribution push business model to a customer pull business model. The country is hoping to come back off these lockdowns soon, and we are positive of a pent-up demand to be seen in this sector thereafter. In building solution segment, all actions that the team has taken towards moving to tier 3, tier 4 cities, to labor hutments, to COVID centers, they are all genuinely rewarding our business in a big way, and substantial business coming from newer customers with far safer payment terms. Lead management tool and heat maps are being used extensively to direct us to pin codes where construction activities are still on. The pandemic is currently posing a lot of headwinds as I speak, but the team is confident to come back as soon as the lockdowns are released. We have done that last year, and our confidence is far better this year. Polymer business also, which used to be primarily focused towards north and west zones earlier, has taken enough actions towards building their credibility in east and south using our Birla HIL brand. Therefore, the team is confident to redefine its focus into greener pastures and continue the growth model amidst the pandemic. Factories have really come out exceptionally well, and even when cities are getting closed, they have secured permissions to continue operations. Throughout the time, we have kept our premises COVID-free, and this has been applauded by the local government when they have made surprise checks from time to time. Our central response team and local response teams at each unit have monitored the health of our HIL colleagues and their families meticulously 24/7 and supported them in time of need. Parador, our flooring solutions subsidiary, has enjoyed a robust quarter last quarter. With most European countries largely out of lockdowns, there was an extreme severe snow wave that Europe witnessed last quarter. Business has returned to normal. Additionally, the resumption of export activities has put our plans for global expansion for Parador back on track. Parador has been resilient and adapted very well to the situation. As a result, the company experienced growth in top line as well as bottom line despite other companies struggling. The various strategies adopted like DIY, e-business, online brand store, etc. have helped Parador deliver a good result. We will now shift our focus back to expanding outside Europe and target global geographies like China, US, etc., while strengthening our holds in different countries of Europe as well. This will happen as soon as COVID situation relaxes. The JV in China has had a robust start, and we are very excited for what is going to come. However, we are facing a short-term challenge of availability and price of HDF boards as well as chemicals in Europe. This is mainly on account of cascading issues due to disruption of operations of key suppliers in Europe in February, March, when Europe witnessed heavy snowfall. This is also owing to very huge demand coming through in some of the other related products. This may have an implication on top line and bottom line in the first half of this year. However, as always, our dedicated team will leave no stone unturned to minimize this impact. At this point, I would like to briefly speak of our other prominent achievements driven by our committed and dedicated employees. It gives me great pleasure to share with you that HIL was the third consecutive year this year included in the Great Place to Work listing. Today, HIL is proudly the #1 cement and building materials company as certified by GPTW for 2 years in a row in India. We are also certified as Super Brand India during the year 2021, and this will be the 4th consecutive years with this accolade. Lastly, while the pandemic still continues to pose headwinds in many of our businesses, I can assure all of you that the team is together and clear about their objectives. We have great brands backed by fundamentally robust business models and highly capable teams. The challenges created by the pandemic have only strengthened our resolve further. The investment decision this year to expand capacity in Eastern region for building solution business is one such investment decision that we will take, and this will augur well for future growth. Finally, I would like to thank all the stakeholders for the continued trust and support you've had in your company, HIL. It has enabled us to meet the challenges posed by COVID-19 pandemic, and given our experience of the last year, we are better prepared. Thank you very much for your patient hearing. I would now like to hand over the discussion to my CFO, Mr. Veerappan, to take us through the specific numbers. I am available for further questions in the later part of this session. Veerappan, over to you.
Thank you, Dhiru. Good afternoon, all. I would like to thank you all again for joining us on the call today. I trust you and your families are all keeping healthy and safe in these testing times. I'll be taking you all through the financial and operating highlights of the business for the quarter and year ended 31st March 2021. Q4 was the second consecutive quarter with better performance than the pre-COVID levels. As all of you know, FY21 started as one of the most challenging years for HIL due to the pandemic. However, extreme passion, commitment, and dedication of the team, HIL was able to successfully convert this crisis into an opportunity through innovative ways of business. This has given us an immense confidence that despite greater challenges foreseen due to the second wave of COVID and nationwide lockdown currently, we will be able to continue to maintain a performance better than the pre-COVID levels. In Q4, our roofing solution business grew by a robust 50% year-on-year. This high growth also reflects the lower base created last year on account of us having missed over 10 days of operations during the lockdown in March 2020. On a full year basis, revenue grew by 22% year-on-year. We continue to expand our geographical reach in Tier 2 and 3 markets through enhanced digital connect with the customers. We also continue to enjoy the highest margin in roofing business amongst the competition. Building solutions witnessed a healthy growth of 23% year-on-year in Q4 with the pickup in real estate activity as Dhiru mentioned. This segment has started making good progress. We are confident of continuing this growth through capacity creation. Happy to inform that profitability margins in this business have been maintained during the year, despite having severe revenue loss in the first half of the year. Polymer solutions business registered a growth of 94% year-on-year for the quarter and 51% year-on-year for the full year. Increased capacity utilization and demand for these products are driving this business, and we are on track to make it a pan-India offering by expanding our distribution network. Significant cost-saving measures and enhanced scale of business has helped this business delivering double-digit operating margin for the first time. Since the acquisition, Parador has moved from strength to strength. The company's revenue and profitability have grown at an impressive pace, even during the lockdown in Europe when other companies were struggling to cope with the changes. The operating margins have improved significantly during the year in Parador, and Parador enjoys healthy cash flows underlined by a robust business model and a vibrant brand, and also strong orientation on efficiencies from HIL. The consolidated revenue came in at rupees 844 crore during the quarter, having grown by 31% year-on-year as compared to rupees 645 crore in Q4 FY20. EBITDA from continuing operations came in at rupees 115 crores compared to rupees 62 crore in Q4 FY20, registering a growth of 85% year-on-year. The consolidated PAT for the quarter increased to rupees 63 crore from rupees 23 crores, growing by 174% year-on-year. For full year FY21, consolidated revenue came in at rupees 3,044 crore compared to rupees 2,555 crores for the previous year and has grown by 19% year-on-year. EBITDA came in at rupees 427 crore compared to rupees 262 crore in FY20, registering a growth of 63% year-on-year. PAT, excluding the income from discontinued operations, too grew by a healthy 116% year-on-year to rupees 214 crore in FY21 as compared to rupees 99 crore in FY20. Total PAT, including profit from sale of discontinued operations, stands at rupees 260 crore, a whopping increase of 145% year-on-year. HAL and subsidiary Parador both registered healthy cash flow during the quarter. We have taken some more steps towards debt reduction by paying off debt worth rupees 91 crores during Q4. Overall, in FY21, we have repaid rupees 332 crores of debt. The long-term debt in India currently stands at rupees 38 crore as on 31st March 2021. We have also fully paid off the debt we had taken for the acquisition of Parador in the current year within 2 years of time instead of paying it off over a 6-year period. The debt to equity at a consolidated level stands at 0.41x as compared to 1.0 as on 31st March 2020. The company's net worth has further increased to rupees 995 crore as at the end of FY21. On 31st March 2020, the company's net worth stood at rupees 743 crore. The earnings per share for the full year from continued operations came in at rupees 286.12, registering a growth of 116% year-on-year in line with our aim of maximizing profitability for our investors. HAL has enjoyed another successful quarter driven by our hardworking, innovative and dedicated teams. With this, I would like to conclude my opening remarks. I request the moderator to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bharat Sheth from Quest Investment. Please go ahead.
Hi, Mr. Dhirup and HIL team. Hearty congratulations on excellent performance on all count, all the division and ROE, ROC, EPS and everywhere. Hello.
Thank you very much, Bharatji. Really appreciate your good words.
Yeah. So now, coming to this, our roofing solution, which grew at 22%, of course, because of low base and margin, EBIT margin is also 23 plus. So if sustainable basis 2 years and looking at current situation, what you describe in rural market this year has been particularly affected. So how do we really look at this business and is there any further room to improve our EBIT margin, from here onward? So if you can give little more color on that broader perspective.
Sure, Bharatji. See, we are number 1 in India and we have grown by 1% our market share further over the earlier year.
Great.
That has strengthened our commitment to stay closer to customers and be rated as the best brand in the country. And I think that gives a lot of solace to us. We are not only number 1 in quantity, we are also number 1 in price. We dictate the best price in the market in most pockets that we are there. So that significant drive that we have made from a distributor push-led model to a retail or consumer pull model last year. And we have used the pandemic to define this change in our model. Bharatji, is really helping us very well. And April has been a further good month for us. So that only substantiates the thought that we are absolutely on right drive. We will continue to take profitable business. We'll not harp on just quantity. We'll harp on quantity with a price that we want to dictate in the market as number one. And therefore, the profitability will continue. Now, profitability is a deliverance of many items. So let me define a few. From an NSR point of view, we are market leaders. We have raised the price in the market again this quarter by about 3 to 4 rupees. Last quarter also, we had raised the price by 2 to 3 rupees. So this is a continuous effort that we are making. Second thing is, the fiber price is definitely going to start looking down for us from Q2 because we have already reached the peak of a differential pricing or a negative pricing for us, which I had been talking about in the earlier quarter. So that will help us in some way also in the material cost. The other material cost, that is cement, fly ash, etc., definitely going to pose threats to us. But the NSR growth and the quantity growth will continue. The profitability is my great belief. There will be some brought back to the cost saving last year. We had done enormous cost saving last year. Some of it, which is relating to people cost, branding cost, which is very small in roofing, and travel cost, which is also at the moment quite less because of COVID. These will come back, but we'll bring them in very, very considerate manner. But I think overall, we should be able to continue this margin is my view.
So, sir, earlier we were looking, industry growth of around 6%. And our growth may be a little higher. So, shall we assume that we will be at a low double-digit top line, will be able to grow because of pricing as well as, volume?
Sir, when you are already number one, there is a finite room to grow unless the market really grows big, Bharatji. So, let me spell that out very openly. The market has grown good last year. We have seen a 9% growth in roofing market in the country. We have grown by 14%. So we have grown far excess of the market growth. Now, I would say that to be on the safe side, still consider a single-digit growth in roofing market. Double-digit will be giving you a wrong projection. We will still strive to do that, but consider a single-digit but profitable growth is what I'll recommend.
Okay, and coming to this second Parador,
yes.
Last year our business in rupee term has grown, top line by 19-20%. But if you can give how much terms in euro term we have grown, so because rupee, currency fluctuation, we can't, really.
Good point.
So
very good point. Very valid point. Thank you, Bharatji, for asking that question. Very valid point. Even if you had not asked, I would have brought it to the investors because we have always been very transparent to all of you, and we want to continue doing that.
Correct.
Now, Parador has faced a very severe COVID condition last whole year, and you would have seen the borders were blocked, and about 50% of revenue of Parador comes outside Germany. Therefore, they definitely had to milk far more revenue in Germany. And as I mentioned, this was DIY through digital mode, which they quickly changed over, and therefore they kept up. Parador has grown close to about 9 to 10% on the top line, which in rupee term is showing to be 20%.
Correct.
My indication of Parador in Europe is normally European countries are not habitual to growing more than 3-4%, but we will certainly drive Parador towards the 10% growth in revenue year on year. That's our aspiration, and even more. Parador, when we took over, was 140 million. Today it is about 170, 180 million. And my estimate is we will double from here in the next 4 to 5 years. And therefore, we have to grow far in excess of single digit, which we will do, and we will do that profitably.
Sir, you have been always stressing that Europe, this business is where the fixed cost is very high. So, is it fair that, if we continue to grow, EBIT growth will be more than the top line growth? And what kind of improvement rather we would expect? Because this year, we have already reported 7.5% EBIT.
Sir, you are absolutely right. Parador's profitability will grow as we grow the top line because the fixed cost is big. Up to 200 million top line, euro terms, they have the capacity. Beyond that, we'll have to add more capex. There will be necessity of some OPEX additions from time to time because we'll need teams in different countries as we try to grow. But profitability definitely will come more with top line.
And sir, last question, if you permit.
Go ahead.
Sir, do we see any threat on the mining of the fiber? I mean, ban coming on any of our country from where we are procuring the material? Like what we saw, I mean, in between temporarily Brazil.
You may keep your antennas open, sir, because very difficult for me to judge from here. I go with what my partners in Brazil or my suppliers in Brazil say, but they do not see any risk at all, and I'm going with that.
Okay, thank you. That's all from my side. Thanks a lot.
Thank you, Bharatji.
Thank you. Before we take the next question, a reminder to the participants, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. Should you have a follow-up, may we request you to rejoin the queue. The next question is from the line of Baidik Sarkar from Unifi Capital. Please go ahead.
Mr. Chaudhary, congratulations to you and the entire team on the last few quarters. The environment's been very difficult, but HR's demonstration of strength has been very hard. Congratulations to you again, sir. A couple of questions. Starting off with domestic roofing, the environment in the roofing sector seems to be rather conducive for the entire ecosystem, and I'm just talking about your other listed peers here. Could you help us understand how much of this is driven by core rural demand, and how much of this is actual market share gains, and what might be the status of the smaller regional players from whom you might be taking market share, and how do you expect the trend to continue?
Mr. Sarkar, first of all, again, thank you very much for your kind words. The team really would be happy to hear them. Coming back to your roofing segment, sir, our segment is primarily on the rural sector. So everything we achieve is from the rural sector, and therefore I owe everything that we have achieved to that sector. We have been able to achieve this by both top-line growth as well as improvement on market share, so the tonnage as well as the price realization. Market has grown last year, so that was favorable to us, even if we had lost about a month of sales due to COVID closure in April. There was a huge pent-up demand that happened, and that has helped. The roofing demand is casted by a good rain in the earlier year. And therefore, the crops are good, and therefore the available cash with the customer, with the farmers are better in the subsequent year, and then they buy a lot of roofing products. So going by that trend, last year the rains have been very good, crops have been very good all these time, and I'm hoping, plus a lot of government initiatives have happened. They have got money in their banks from the central government. All of that are very positive. There is an extreme bullishness in the rural sector, and that should definitely help us in roofing business this year. While I say that, there is a damping factor, which is COVID, because for the first time, the second wave, as it seems, is getting into the rural sector. What havoc it will create in the coming months, only God can know, because I can't foretell that. But I'm confident that as the closures of the states, that means the state closures as they have announced today in many of the states, open up, the demand is going to flush back, and the pent-up demand will happen again this year like last year, right up to the rains, and we will be able to see a good season once again this quarter.
That's helpful. How's the pricing environment in general? We understand steel prices are up quite a bit, and though not like-to-like comparison, do you reckon that might have played a bit in shifting consumption patterns from probably steel to asbestos?
Sir, I do hear a lot about the steel to asbestos, but from my little 4 years experience, I can tell you they are quite different business segments. Customers who prefer steel go for steel. Steel is almost double the price of asbestos, and therefore to assume that someone will go for asbestos just because steel prices have gone up is a little difficult for me to say. But however, if there is a certain crisp of customers who are in between selection of steel and asbestos and would like to draw to asbestos because steel prices are going up, that will definitely help the asbestos segment if the steel prices continue to go up. Second, of course, is it gives us a little bit of power to raise the prices further. And that we are trying to do at every significant opportunity. And HIL leads the prices I mentioned. So all in all, I would say steel price going up, good news for investors.
Sure. And what's the utilization in sheets today? And is there any update on the green roofing product? I reckon the challenge here isn't as much product chemistry, rationalizing costs to manage asbestos costs. Any update there would help. And if I could just squeeze one more in, I didn't quite understand your comment on the negative spreads emerging from Brazil. So, if you could just fundamentally explain how that will work out. Thank you very much.
Sorry, your second point, negative, what was that, sir?
No, I think you hinted that raw material fiber import prices from Brazil might begin to slow down might begin to...
Oh, no. Let me ask you. No. Yeah. All I said is Brazil was, we are buying from Brazil for almost 3 quarters now. Initially, there was a little bit of a negativity because we were not getting the right mix of fiber from Brazil. That's exactly what I was talking about in the earlier 2 quarters to all of you. That has now settled down. R&D has worked it very well for us. And therefore, from quarter 2, we would definitely see benefits coming on fiber to us over last year, quarter 2. So it was positive remark on Brazil imported fibers for HIL. That was one. Now, what was your other question, Bharatji? Sarkarji?
Sure.
Utilization, our capacity in roofing is about 1.1 million metric tons in a year, and we are far away. We are about 77% utilization at the moment. We are using part of that capacity for trials and tests for the non-asbestos roofing Fortune product. We now have a dedicated Fortune line in Faridabad, and that's helping us immensely. We have started moving good Fortune new product, that is through the humid cure product, into the market. And hopefully this business is definitely going to outshine big ways in the next 3 to 4 years' time, 2 to 3 years' time.
My best wishes, sir. Thank you so much.
Thank you, Mr. Sarkar. God bless you.
Thank you. The next question is from the line of Jigar Shah from ICICI Securities. Please go ahead.
Thank you for the opportunity and congratulations to HIL for a good set of results. My first question would be on Parador margin. You have improved the margin from 7% to almost 12% in FY21. So can you highlight what are the key reasons for this kind of margin conversion in last 3 years? And what would be,
I'll be happy to answer this question. See, when we took Parador, we knew, it was the 175th company that we had looked through in the M&A circuit. And it ticked all the boxes because I wanted a company rich on technology and brand, low on profitability. You'll be amused to hear that I wanted a company with low in profitability because the multiples are then easy to be absorbed. So 7.5% was the EBITDA multiple at that stage for this company. And our biggest and the first important focus, apart from getting both the companies together culturally as well as financially, was to look at profitability of the organization. So we had dedicated teams of Six Sigma and lean manufacturing planted in Germany who are working with our German colleagues, enhancing their skills and helping them to realize the low-hanging fruits. We have worked very well with them on material cost and tried to reduce that cost. We have looked at other variable costs. Cost saving was a big drive, like in HIL India. We did similar thing in Parador last year to try and bring that through. We've also got some help from the government in way of offsetting the manpower cost during the times when other companies were not fully running, and therefore we could get some benefits. So that's a very small element though. So all said and done, all elements that goes into building the fixed and variable cost of an organization was looked at minutely towards enhancing this. So the enhancement has come from within the organization. This is a good profit realization that the organization can have, provided we don't have a hit on material cost and those kind of stuff.
And going forward, what would be the outlook? Will you be able to continue the EBITDA margin of 11-12%, or the thing you mentioned that is,
for a safe consideration, I will say consider for Parador a 10% EBITDA and a higher single-digit growth, but the team will try to do far better than that.
Okay. And also, sir, you mentioned a lot of IoT 4, Six Sigma, lean manufacturing. You are doing a lot of things in India in all this technology and processes. So, digitalization. So, would you like to highlight any specific things where you will be able to increase your efficiency and margins going forward due to all these new initiatives?
Sir, these initiatives are well-proven initiatives in the industry, so we are not attempting on them as the only organization. But anything that we attempt on, we do it through a very, very stringent norm of selection, where the ROIs of every investment are first looked into before we step into it. So I can, in a global way, commit to you that every initiative that HIL is taking, they are very confident of the returns from these initiatives. Now, let's take off IoT 4.0. IoT 4.0 is nothing but having a very transparent factory where you're able to see end-to-end of on the factory, and therefore the machine utilization, even right up to maintenance, preventive maintenance of the machines and everything can be seen on a palm top. So we have got this done in 5 factories. And we are getting this done in many other because it's giving a realization to the bottom line. Similarly, you look at Ariba, it has given very good saving because it's a reverse auction tool and it's helping us from. So I can take you through each one of them, and everyone has a very, very clear mandate for a cost saving. Idea management is nothing but idea from our own colleagues on how to improve the cost base. And we have got about 1,200 plus ideas coming from our own colleagues, which has delivered a cost-saving drive which we have taken last year. So all of this are all towards that angle.
So, can you quantify any specific cost-saving, like big number of amount or something like that you have come out of this?
Sir, I was not prepared for this question. Very difficult to answer offhand, sir. Yeah. We will be happy to take you through in case you have a specific.
No problem. And my last question would be on Parador. What kind of return ratios you will be doing at this property? And
sorry, what kind of
return ratios, ROCs?
Oh, ROC of Parador.
Yeah.
We should be looking at 14% ROC in Parador, and I think we will only enhance this further as we go.
Okay, that's it from my end, sir. Thank you.
Thank you very much.
Thank you. The next question is from the line of Naresh Kataria from Moneycurve Investments. Please go ahead.
Thank you, Dhirup and the whole team. I know it's customary to say congratulations, but it's really exemplary performance. So fantastic. Congratulations. My only question is on the 1 billion aspirational vision, which was mentioned first time in our presentation today. Very happy to note that. So I wanted to understand elements of strategy, what we have planned to reach 1 billion. Of course, I got part of the answer when you said our vision is to double from 170, 180 million euros, the Parador piece. What are the other elements? Because I don't think roofing is going to grow 150%, 140% to reach 3,000 to 70,000 crores. Would it mean we could look at some acquisitions, or will it only be the existing segments? So just wanted some color on what's the roadmap towards 2025 1 billion.
Thank you, Naresh, and thank you very much for your kind words. Naresh, 1 billion is my dream, and unless we have a dream in place, we can never move forward. And 1 billion, let me just tell you, was a dream made by the team together when our organization was 140 million. This was far before Parador was taken. It was just after I moved into HIL in the year 2019. We made this dream. And 140 million to 1 billion was the flight that we wanted to take by 2025, 2026. We are happy that we have come through 3 times of our revenue. So from 1,000 crore, we are now 3,000 crore. From 3,000 crore, we have to reach 7,000 crore. I know Indian rupee may, depreciate further. Maybe 7,000 will become further steeper with 1 billion. But let's take 7,000 for the sake of discussion. Indian operation is to double from here. Parador is to double from here. Straightforward. Now, Parador, there will be lots of things that we will be doing. We will be moving step by step into more countries in Europe, strengthening our sales in there, opening up own organizations in these countries because each one of them work differently. Costumer preferences are different, product preferences, consumer demands, DIY, digital, everything is different in every country of Europe, even though it's collated as a very small geographic location. And language plays also an important role. So localization is very important. Customer service requirements are different in Europe and different countries. So we'll be walking into that. We are also looking at North America. It's just at the scratchy side at the moment. We have looked at joint venture in China. I'm very hopeful that the Chinese joint venture, which delivered about 3.5 million euro last year, should be able to do about 20 million in the next 3 to 4 years or even more. So there'll be a growth coming from there. So Parador will grow. In India, pipes will grow. The polymer division, which is about 360 crore today, should become more than 1,000. 380 crore will become more than 1,000 crore. That's for sure in polymer. We are looking at the building material also. That will also grow. So, for instance, the new capex in East will add another 110 crore in 2 years, 3 years' time. Similarly, further capex wherever that's needed to strengthen our building materials, we'll do it. We are trying to bring in some new products into the foray, and we will talk about that as we go forward and establish that. So those are the things. There may be a delta of 1,000 crore here and there, which will need to be bridged through an M&A, and I'm not losing out my attention on M&A because I believe there is a 1:1, 1:1 debt equity that one should look at for a harmony of the organization, and we were 1:1 when we secured Parador. Now we have come down. If you leave out the European debt, because that is at 1.8% and is easily being furnished by Parador, we are only at 0.16:1 debt equity at the moment. There is a good bit that we can do. Let me also remind all our investors and owners of HIL that whatever debt was taken to secure Parador, to acquire Parador, in India has fully been repaid. So Parador now is free to you. And similarly, any asset that we take, we will be working on that direction, that any debt we take, we will be furnishing out of the proceeds of that organization. And together we are going to strengthen the company. So that's the dream.
Fantastic, sir. Thanks a ton and best wishes.
Thank you, Naresh.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. The next question is from the line of Viraj from Securities Investment Management. Please go ahead.
Hello. Thank you for the opportunity and congratulations on good set of numbers. I just had 2 questions on, if you can just provide some more deeper dive into, what is our share now in core markets? So we've seen quite a healthy growth in FY21. So, because of the initiatives we have taken, so what would be our share now? And what kind of opportunity or market size, we are looking to, is there in rest of the Europe? So any color you can, share on that. Second is, if you look at the difference between console and balance sheet, that's close to, 120 crores or cash on Parador balance sheet. I mean, there's that as well. But there's a sizable amount of cash. So, do we have, if you can just provide some color, what kind of expansion plans in terms of capex or any other requirement we may have in Parador for FY22-23, and what do our plans with the surplus cash there?
Virajji, thank you so much again for your kind words. Look, Parador, I just mentioned that every country by country, we will be working out the expansion plan. We have got a slight setback of about a year because of COVID, because people couldn't go out of their home countries. International borders were sealed. They were worried about COVID. Vaccines had not been given. So naturally, we have got a 1 year setback, if I may say. But our intentions are very much there and the directions are absolutely clear. We want to grow in China. We want to grow in the Nordic countries. We want to grow in Spain. We want to grow in France. We want to grow in Switzerland. We want to grow in Austria, Germany. We want to grow in United Kingdom. So it's very well chartered. I think the team has worked out very clear direction towards these growths in the next 3 to 4 years' time. The investments that will be needed in way of building our team, which will be more operational. Wherever there is a need for a small capex, we will not shy away from that. The cash in Parador is a creation of a good operational process that has been created there, and the team has been energized. This year is looking tough, as I must say that quarter 1, quarter 2 in Parador will be very difficult because there is a very huge pressure on HDF availability, which is a board which is not available in Europe. The prices have soared through the roof. Lumber prices in Europe is scaling through the roof. Chemical prices are scaling through the roof, which is completely unimaginable. So we are trying to live with that, but one is the price, one is the availability. That's putting a bit of a break to the revenue growth in Parador in quarter 1 as we see, and maybe to some part of quarter 2. But we will make it up. This is a short term. Long term, Parador is absolutely planned out, and we are going to do all these executions as we go. Part of the cash will be used for them. There is a standard capex that we use in Parador. Last year, we didn't allow them to do. So about 5-6 million will be towards a normal capex that we'll be doing this year in Parador, where the bottlenecks will be released and part of it is maintenance capex. So overall, it's a pretty well planned out 3 to 4 years engagement in Parador, which will take us further.
Okay, just want to follow up on this. Since we have a very clear defined growth map for Parador, can you kind of, just give some indication in terms of how big each of these markets are, let's say the rest of the year, and is it kind of more fragmented markets, and hence we kind of, looking to capitalize on that, or any color on the market structure as well?
These markets, each country, and if you have worked in Europe, you would know, each country is absolutely different. France looks more on after sales than pre-sales. Spain looks at more pre-sales. They are looking at Spanish people there who can speak the language and they have trust in that. Switzerland is far more globalized, but Nordic country is entirely different. Their requirement for product is also different. They want wood flooring, absolutely. They don't look at LVT or vinyl products and all. So every country in Europe have a different requirement. They go through different channels. Some of them go through big dealers. Some of them go through DIY. The others are going through the commercial segment, as we say. So each project, so there are big influencers who control 6 or 7 big projects, and you are supposed to go them. So there's a mix of leverages or levers that we have to utilize to grow in each of these countries, and that's exactly the ground route that we have to follow, and we will do it through that route.
Okay. Thank you very much. Good luck.
Thank you, Viraj.
Thank you. The next question is from the line of Shantanu Basu from SMIFS Limited. Please go ahead.
Hello. Thanks for the opportunity and congratulations for the wonderful set of numbers. I have 2 questions. The first is with respect to Parador. So, sir, can you give me the breakup in terms of sales in Germany and Austria, rest of Europe, and rest of the world for the full year for Parador? And the second question is with respect to roofing. So I want to understand whether the Humidcure technology product has picked up. Has it been released in the market for commercial sales purpose, or is it in the seeding stage?
Thank you, Shantanu. I'll call you Shantanu. You can call me Dhiru.
Yes, of course.
Shantanu, thank you very much for your appreciation. First of all, you asked about, Parador. And I must say that in Parador, the breakup of revenue historically has been Germany and Austria, which is their home country because we have factories in Germany and Austria, contributes 50% of the revenue. 25% comes from Europe, and 25% comes from rest of the world. That's been historically how Parador has been. Now, when you come to last year, there has been a growth in German business because the borders were sealed, so naturally they couldn't travel, the product couldn't travel enough. So rest of the world came to a mere standstill. So 25% of the revenue was kind of washed out because of COVID for most part of the year. The second half of the year saw the Europe part growing well, but the entire, the credit is given to the team that we have still grown in Parador amidst all this challenge because we have grown in the home country, and we have been able to pick up additional market in Germany and Austria and thereby grow. So Germans and Austrians were sitting at home. They were not going in for their holidays, and they were spending in their home decors or refurbishments, if I may say, and looking at DIY stores. And Parador was the only flooring company which was selling through DIY and digital route. So that supported them to buy from Parador, and therefore the entire revenue got benefited by Parador. So that's how it is today. Does it answer your question?
Yes, it does. I mean, but if you can just broadly give me the numbers just to understand, how FY21 was vis-a-vis other years. So the German and
there was an increase. There was a 10-12% increase in business in Germany and Austria, and the rest of it came from Europe. Rest of the world was almost minimal. China did about 3.5 million. So that's the story last year. This year, as the borders open, situation should be better. We are facing a bit of problem in raw material at the moment, but that's only a finite issue which we'll sort it out. Now, coming to your second question was on roofing. So the Humid Cure has tested, is coming out to be very well because we have started it from October last year, and actual production has started in January this year from our new plant in Faridabad. The product looks excellent aesthetically as well as technologically. The strengths are wonderful. It's far superior than the earlier product also that we had made for non-asbestos. So it is only enhancing our non-asbestos deployment. We have started now feeding it in different parts of the country. We have already sold 7,200 metric tons in the last few months to different institutional customers. And by October this year, we have given it the time to ourselves to get the site responses on this, and if it looks good, then there is nothing that will stop us from going full out on this product. And this product will be the future for HIL, sir.
Right. Okay, so you have sold 7,200 metric tons in the current financial year, or how?
In the last 3-4 months time, we have sold that, sir.
Okay, so basically in Q4.
Q4, yeah, and April, if you can count that in. Yeah.
Okay, Q4 and April. Okay, you have sold 7,000, basically seeded 7,200 metric tons, right?
Yes, sir. The technology looks wonderful. We've got external consultants working with us who are world famous consultants in non-asbestos roofing solutions, and we have also got this tested at Japan, and they have sent a very positive report to us. The IP has been registered, and PCT is being done in multiple countries outside India because we want to take this product outside the country, sir.
Right. So then when will commercial sale begin, commercial production and sale?
So when we are talking about sale of 7,200, they have all been commercially sold. So if you are talking about when will the big scale sales start happening, I think give it time up to October, and then we will start doing it in big number.
Okay. Thank you very much, sir.
Mr. Basu, have a good day.
Thank you. The next question is from the line of Amit Vora from PCS Securities. Please go ahead.
Good afternoon, gentlemen. Congratulations on the great set of numbers. Most of the questions have been answered. Just a couple of things on the capex. So, what is the total outlay that we are going to spend for the upcoming capex in Orissa?
Amitji, I hope you are doing well and your family. Thank you very much. It's 82 crore that we have planned to spend on the East project.
Okay, sir. And if I recollect correctly, you mentioned that at peak utilization, we would be able to generate around 110 crores from this unit.
That's right, sir. And it will deliver about 150,000 meter cube of blocks. And that's about 20% enhancement in the blocks capacity. It will deliver about 35,000 metric ton each of panels and board, which is roughly about 50% enhancement on capacity for boards and panels.
Sir, any target that you have in mind by when you would want to reach peak utilization for this one?
The commercialization should be same time next year, sir, Q1 next year. And because at the moment we are at the land acquisition, and because of COVID, things have slowed down immensely, so we'll have to give it time. Give that another year and a half, and we should be at peak.
Great, sir. Great, sir. One more question is on Parador again. You mentioned that you would be looking at North America as a market. So, is there anything that we are doing at the moment in North America in terms of Parador?
Honestly, negligible.
Okay, so that
we are looking at. We have two choices. Like we had in China. China was the first JV I settled in immediately after we bought Parador, because I'd worked in China also, so I knew the market a little bit. In America also, that's where I've run a plant for almost 6 years, North America. Look, setting up your own factory or your own team there with a lot of people there on ground and huge cost, is not possibly the way I would like to look at. So I'll again look at a joint venture partner which shares my risk, and they have certain people on the ground, and we put additional people on the ground, strengthen the team, spread the cost, and enjoy the revenue and the profitability. So that's the model I would like to walk into North America. So we have already shortlisted one company there who are present in both North America as well as in Canada. So let's hope everything going for this JV should take shape sometimes. So
fantastic, sir. Fantastic, and all the very best. I'll jump back in the queue. I have a few more questions. If time permits, I will get back.
Sure, Mr. Vora. Thank you very much.
Thank you. The next question is from the line of Shubham Agarwal from Equitas India. Please go ahead.
Yeah, thank you for the opportunity. First of all, sir, I would like to congratulate on posting such a good set of numbers in such tough time, and I hope the entire team of HIL is doing well. Sir, most of my questions have been answered, but I have a question relating to roofing. So, given the current situation in rural India, which is our main market, and you did mention that April was good, but May is the time when most of the COVID had spreaded in rural India. So what have been your experience till now in May when it comes to demand? And is any of our manufacturing unit being impacted either due to lack of oxygen or lack of labor, if you can give some views on that part? And also I would like to know the volume growth year on year in roofing division.
So, Mr. Agarwal, thank you very much for your kind words again. Roofing, April has been good. We have, as I mentioned, looked through a far more deeper last leg connect in roofing last year, which was a change in strategy. And therefore, even in May, while things are not happening in the ideal way that you want, the season hasn't been able to set in because of COVID fears and other controls. We are hopeful that we will be able to make up in the coming month and a half after the COVID relaxes or the controls relaxes. So I'm still very positive. And on account of that, what we have done is we have taken special approvals and kept all our factories running. Therefore, the inventory is getting built up, has been built up, substantially to cater to a pent-up demand when it comes before the rain. So I'll keep my fingers crossed. This is a durable product, and therefore there is no issue if, let's say, the pent-up doesn't happen and we are stuck with a lot of inventory. We will have to then manage the inventory in the Q2. But it's worth a risk, and I wanted to go for that. So coming to our factories, none of the factories have had a problem with COVID at all. Yes, employees, many of them have had problems with COVID because of social circuits where they've got it from their relatives or other social medium. And that is something we couldn't avoid. But we have taken full caution in the factories, and we have kept all the COVID-infected colleagues as safe as we could by all kinds of measures, including hospitalization, oxygen, beds, and everything. Since I'm on the board of the C.K. Birla Hospital in Kolkata, the CMRI, and the Jaipur Hospital. So, it also supported, and also the group's philosophy has been to support employees. So we've gone all out of the way to support the families and the employees.
Right. Sir, and the volume growth year on year that we achieved in roofing division?
I don't have that number immediately.
14%. I think
I'll get back to you, sir. Sorry, 14%.
14%.
Thank you.
Oh, okay.
Thank you, Veerappan.
Thank you. And lastly, on earlier call, you had mentioned that you are working on some of the value-added products. So any breakthrough that you would like to share, if any?
Mr. Agarwal, again, because of COVID, it's taken a little bit of a backseat. Give me another quarter or two. We will come with good news to you, sir.
No worries, no worries. And
but the focus is on. Focus is on completely. HIL is a one-stop building material solution. It's not an asbestos roofing solution anymore. In fact, the revenue contribution from asbestos, which was 78% when I joined 4 years back, is now only about 30%. The rest is non-asbestos. So more and more you will see, while asbestos roofing will grow, the contribution of asbestos will continue to come down, thereby making it a far more sustainable company. And all of these new initiatives will help, sir.
Right. And lastly, on the polymer division, what was the capacity utilization that we achieved for the last quarter?
Sir, in polymers, we have been able to do well. So we have 3 factories, as you know. One of them is in Faridabad, one is Hyderabad, and one is in Golan. The Faridabad factory was absolutely fullest. Hyderabad was also fullest. Golan was about 45%.
Great. Thank you, sir. Thank you for answering all my questions, and have a good quarter next year.
Thank you, sir. Thank you very much, and you stay safe too.
Thank you. The next question is from the line of Tarun DS, an individual investor. Please go ahead.
Yeah. Hello, sir. Congratulations on an excellent set of numbers, and thank you for the opportunity. Am I audible?
Yes, Tarunji. Yes, absolutely, and many thanks for your kind words.
Yeah. So I am a recent investor, and I just wanted to understand the landscape of the Aerocon business, and if the pent-up demand and the commercial demand springs up, let's say in 6 months or so. So I was just trying to understand how do our products, the both wet and dry, like this fit in the real estate landscape that we can look at in the next 3 to 5 years that can happen.
Okay. So you're talking about Birla Aerocon, which is the building solution, Tarun.
Yeah. Yes.
Okay. So first of all, welcome to the family of HIL, and we hope you will feel very happy with your decision of being associated with this company. Building materials has wet volume solutions and dry volume solutions. So when we talk of wet volume, we are talking about the AAC blocks, which is our biggest product. The market is half organized and half unorganized in India. And when we look at the total market size, HIL has about 18% to 19% market share. That's because there is a substantial bit of unorganized also, which we are unable to tap. We are number one in the country. We are the best known brand. In fact, blocks are known as Aerocon blocks in the market. They are not known as AAC block or anything else because Aerocon is a brand well known in the market. The tier 2, tier 3 cities are now growing in construction, and therefore we see that the block requirement is increasing far more in the tier 2, tier 3. We have our presence in south, west, and north, but we were completely not there in east, and that's the reason we are now setting up a new plant in east. This business is all about adding incremental organic way factories and then adding to your product and doing the sales. It's also about creating a market need for block, which our technical expert team, so there's a team of 11 people in technical experts who walk across the country and work with the influencers and the construction guys and help them to understand how to get benefit from our product. So we do mocks at various places for them to understand this better. So that's exactly the engagement that we do. We do our engagement with masons, with the influencers, with the construction companies, and try to promote this product. So that's about the blocks part of it. Panels and boards, so we are hardly there in boards. Our main business is panels. And panels, we do about 60-70 crores business, and we are about 60-70% also. That's about 120 crore business totally in India. We have the majority share there. That's also a very high profitable business that we have. We are again present in Hyderabad for panels and in Faridabad for panels. So this new bit that we are trying to create now in East will augur well for our Eastern Zone panel requirement. Panels we have suddenly realized can also get sold for the labor hutments and the COVID center, and we have realized this last year, and we have pushed big numbers. About 42% of our revenue has come through this sector, which was earlier not there in our business cycle at all. So there is a big scope for panels to improve, and we are going to do that. Boards, we are not fully into that. There are other competition of ours who are doing much better on boards. We are not so much into boards. But the new plant in Faridabad, which we have set up for Fortune, can also make boards. And we are also trying to make boards out of our existing roofing plant in East during the off-season. So during off-season, the roofing plants are not fully utilized. Therefore, adding some capacity, some capex there, we can make boards out of these plants, and that's exactly the route that we are going to test in the Eastern Zone. So this is the business for you. This business size will be about 350 crore at the present capacity, and as we keep on adding capacity, it will further improve. There are some added products that we are trying to bring in also along with this. Let me take a pause and come back to you in the next couple of quarters with the added products.
That's really helpful, sir. And just a small question on Paradox, that as I can understand that we were able to really utilize the opportunity because we had an online setup, and we were able to use the e-commerce and the DIY channels very well. But I was just wondering that if, as the Europe is opening up now slowly, so could the offline market come back and take that pie that we have, worked hard and taken in? So how do you see that happening when the offline retailers are also back in action? So if you could help with that.
Tarunji, as things open up, my worry is far lesser. This was more towards enhancing that the revenue that I'm losing from rest of the world market, which is 25% historically, we are able to fetch through home market. That was the need then. And this has helped us. This has augured well during the time of, if that demand goes back to original feet, first of all, I don't worry about it. Second, because I'm going to go to other areas also, so I'm going to expand in other countries also. There's a good bit expansion that is there in the offering. We have not been able to do it that well in Parador historically, and HIL will support Parador in every way to do that. Second is, you look at Germans, so when we have discarded one of the, so there was a three-step sales, distributors, then dealers, retailers, and then the customers. We have shut that to a DIY and the customers. So a lot of margin Parador has got, and we have been able to give very good prices at DIY. So the customers ultimately will look at what is beneficial to them. Also, the online brand store that we have utilized, that has a software where you are able to download the software into your mobile. Any one of you need to understand that, please get across to us. And then you can look at your own floor, and with the existing furniture, you can select various different versions of Parador flooring and see how it looks on your floor. So it's so easy for customers to then go ahead and order. And I think they are not going to give that away too easily. Hello.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. The next question is from the line of Manish Dariwala from Fiducia Capital Advisors. Please go ahead.
Yeah, very good afternoon, and fantastic performance, and not just this quarter, but like over the last 4 years, in the time that you've kind of worked in. And you've like really transformed the organization from what it was to where it is now, and with this aspiration of a $1 billion revenue by 2025, I'm like very confident that we'll make it there.
Sir, I'm not able to. Sorry for interrupting, but I'm not able to hear you very clearly.
Mr. Dariwala, if you can speak closer to the handset and speak a bit slowly, sir.
Yeah. Is it better now?
Yes, sir.
Yes, it's far better. Hello. Thank you.
Oh, thank you so much. So I was basically complimenting on the performance, not just this quarter or the year, but like, over the last 4 years, the way the organization has been transformed. So now, I wanted to take an understanding that HIL has a leadership positions in the various businesses that it has taken up, whereas the new business of pipes is a business which is already there, in a crowded space where there are already very strong players. So, what kind of an aspiration and what is the edge that we have there in in making a play in this business? You also said that you are taking to 1,000 crore revenue. So, could you just give me a kind of understanding about our play in the pipes side of it?
Sure. With pleasure. So, Mr. Dariwala, first of all, you're being very kind. But yes, 4 years has been good strength for us, and HIL has enjoyed. And I must say that there's a lot to achieve. So we are just at the brim of a further expansion in the organization, and I think the whole organization enjoys this profitable expansion. Coming to pipes is a very, very populated place. You are right. There are some very big names there in pipes who have created these names over 20, 30 years, and we are just there. We have just started. So I think 3 things work in pipes, as I understand it. A, the brand. Because pipes, even though it gets hidden behind the wall, consumer wants to know what pipe it is. Bhai ka pipe dena, for instance. It's about the Astral pipe branded with Salman ji in West. So they want the brand. Birla name is a very big brand in India, whether you like it or not. And we have Birla HIL brand to our pipes. There is no other Birla pipes in the country. So that gives us an edge over others, and that's the brand pull. We have to only build it in a fashion, and that's exactly what we need to do. Second is product quality. It's so given, but the product quality has to be par excellence. Ashirvad, I believe, are number 1 in product quality, and our product is absolutely at par with that. So this is confirmed by the market experts, and therefore we are very happy to bring a product to the market which is highest of the quality. Third is people. It's the team, it's the spread, it's the connect that you should have in the market. It's all about plumber engagement. It's all about getting to know what they want. It's all about giving them what they need. And, we are doing exactly that. We are not looking at big distributors because they're not coming to us. They are already with the big guys, and why would they come for us for a lower volume? So we are going to smaller guys, going to the plumbers, developing with them, working with them. A lot of plumbing exercises are being done together. During the COVID, we have gone all out of the way to support them. I'm not saying we are the only one. Maybe others have also done it, but we are definitely doing the right way. We have moved, our strength was north and west because we have 2 factories, one in Faridabad, one in Golan. We have now moved to south and east. South, we have created another factory in Hyderabad. And east, at the moment, we don't have a plant, but we are supplying out of our existing factories. And we are developing even B2B. We are trying to engage. So B2C, we already have a dominance by way of the spread that roofing segment gives us in the tier 3, tier 4 cities. And believe it, tier 3, tier 4 villages, there's one store which sells everything, and pipes is amongst it. So we have that benefit. We have the spread, we have the brand, we have the quality, we have now good set of people, and we are growing every day on that. So I think that's what's giving us the true strength of pushing pipes. Putty is another product which works very well with pipes. There's a 42% cohesion that we see in both the businesses. So therefore, bringing putty into the foray and joining it with pipes has helped us to secure much bigger accounts, distribution accounts, because they get a volume, and that's also helping in the fray. So we have grown about 63% last year, in 64% in pipes, and 51% in polymers overall last year. And I think that's been a month-to-month work that has been done. So every month growth over the last month. Team is fully motivated. We have everything that is needed. We are doing small brand exercise. If you're in Delhi, you would see all the three-wheelers having HIL, Birla HIL brand behind them. So we are doing very focused way, but very, very careful about the spending, but doing it the right way, sir.
Thank you very much. Another question that I had was that, see, we have global aspirations, and we are a leadership play in the segments that we are, and we also recognize the importance of R&D. So one, I understand that the R&D is being done on the roofing side, where we have come out with what is the product,
Fortune, yeah.
Fortune brand.
Fortune.
Yes. Right, the humid cure. So meaning on the R&D side, meaning how do we kind of rank at a global scale or at a global level? Meaning, are we looking at some patents? Are we looking at some kind of some cutting edge thing where which basically helps us in ensuring and strengthening our number one position, and also maybe looking at some sort of expansion, global expansion or something?
So first of all, R&D is a very, very strong hold that I believe in. We weren't as strong 4 years back as it is today. And Fortune is an entire development of R&D with absolutely no collaboration with anyone else. And I'm telling you, this is a product the world doesn't have. And therefore, we are able to get the IPs very smoothly done because no one is there to challenge us. And this product is going to make a mark in the roofing segment. R&D is also supporting immensely for pipes because a lot more recipes are being worked on, lead-free pipes that we are delivering, and continuously working on cost savings on all of that because all of that has emphatic deliverance to bottom line. But now we have a very strong R&D in Parador also. So for the products of Parador, we have a very strong R&D where almost 1/3 of revenue in Parador, or rather 50% of revenue of Parador every 3 years is new and made by the R&D. So which means they're continuously developing newer products in Parador, which adds to the value and gets us better profitability and market penetration. So in blocks, for instance, we are looking at bullet-free, panels and blocks to be made for the military application, and a joint venture project with IIT is going on. There are lots of things that we can do further. I know this can be further enhanced, but we want to see R&D as really number one.
Oh, fantastic. Thank you so much, for your very detailed responses, and all the very best.
Pleasure is mine, and we can always catch up again. If you have any other sense on R&D, I'd love to learn from you, sir.
Oh, that'd be wonderful.
Thank you.
Thank you. The next question is from the line of Naveen Bothra from Shubh Labh Research. Please go ahead.
Yeah. Good afternoon, Dilip sir, for excellent performance. Congratulations.
Thank you, Naveen ji. Thank you so much.
Yeah. My question, almost all the questions have been answered. Just a couple of questions. One is regarding our aspiration of $1 billion by 2025-26. you have almost spoken lot of things about this thing. So going ahead, our new product you discussed, but in the last call you said that we may come up with pants, foray and all these things. So in the piping business, some adjacencies are there, sanitary ware, faucets or water tanks. So if you can say something about this, all the new products and all these things, because when we see HIL, we can make a complete house with all the products of HIL. So some gaps are there, like water tanks, sanitary ware, faucets, or in the flooring also we don't have tiles. So if you can talk about all these things, because all these things are going to be complemented to our $1 billion aspiration.
Navinji, it's such a wonderful thing to hear from you, because what you're not challenging today is the performance quarter on quarter, but actually helping me to think forward for the 1 billion. Thank you very much, sir. That's really your company. I would love to hear from you on a personal call someday. But let me quickly answer this for the benefit of everyone. We have done an extensive work on sanitary ware faucets at one time, and we found that we were not able to get a good business in India which was ethically run, and the multiples were well within our reach. So it's not that we have left it, but we have not found the right company, I would put it that way. And this is not something that I can grow from zero. I would rather have to take a company and on that. Tanks is something we are definitely looking at. Tanks has a very big element on freight, therefore it has to be on a localized area. We are looking at that concept, and we will get you more details in the next quarters as the business takes some shape on that. Tiles, again, we have had an extensive look, sir, and we have not found a company which we could possibly invest, which was ethically run at that stage. But this is now dated. This is about 3-4 years back exercise. We are happy to take a look at it, and if you have any other advice on that, we'll take it. But Parador is a brand which is number one in Germany, and we would not bring in any product into Parador which in any way dilutes the brand factor, sir. So we'll be very conscious of the brand, and it's getting us high NSR, therefore the customer realizations are better. Some big names like Hadi Tirani and others who are world recognized interior designers are collaborating with Parador, and therefore that brand part will be of extreme importance. On pipes, we are definitely looking at additional pipe variants. So for instance, we are in CPVC, UPVC, SWR, column and pressure pipes. We are looking at HDP if that is a possibility. We are looking at PEX if that is a possibility. We are looking at different sizes of pipes, agricultural pipe, though the margins are low, whether that's an area we should walk into. Different types of fittings, so we have enhanced the fitting range immensely, and as we are speaking, the range is getting further enhanced. So that will continue in our dream towards making pipes a big game.
Okay. So if you can talk a little bit more about the pants for it, because we have arc blocks, we have bond, we have putty. But pants for the you spoke a little bit in the last call. So if you can throw some more light, can we hear it?
I will, sir. I will. Please give me a quarter or two. I will get back to you.
And regarding the Parador business in India, because right now we are not seeing that much of Parador in India. So if you can
Sir, it's very difficult, sir. Sir, it's very difficult. Last whole year, we have not been able to do much meaning in Parador India because new projects who were looking at high-end flooring was not at all there last whole year. So it is something that we have. For instance, we have acquired a wonderful five-star hotel in Sri Lanka for Parador. But in India, we have not been able to make these breaks in a big way. So Parador India hasn't taken shape primarily because the need for a very high-end, variant flooring is very niche in India. And because of pandemic, last 12 months roughly, this market has been slow. But it should pick up very soon, and we will do what is necessary to build this up also.
Okay, sir. Okay. Thank you very much. All the very best, sir. Thank you.
Thank you. Thank you, Navinji. Thank you.
Thank you. The next question is from the line of Khush Gangar from Care PMS. Please go ahead.
Sir, my only question is on the polymer side. Did we have any benefit for the last couple of quarters from the rising PVC prices, or the current margins at current capacity utilization are sustainable?
You're searching into my internal P&L, but Gangaji, this is your company, so you need to know that. Yes, we have. We have been able to achieve roughly about 2% on the polymer segment's profitability on account of, securing PVC from different sources. That may not continue because PVC prices are already started sliding.
Sure. That's it. Other questions were answered. Thank you so much, sir.
Thank you, sir.
Thank you. The next question is from the line of Shreyan Jain from Quest Investment Advisors. Please go ahead.
Hello.
Yes, Mr. Jain.
Congratulations on a great set of numbers. Most of my questions have been answered. Just in our previous interactions, you had mentioned that we are completing 75 years. So, any idea on any special dividend for investors or sort of anything on that?
Dividend was announced. If you're not happy, you should bring this up in the AGM. But everything else, sir, is in the hands of the board. I think I'm too small a fry to talk about this, sir. My apologies. That's not an answer I can give you.
Okay, all right. And so just last bit on the Parador side. If I look at the Q4 numbers, if I just compare Europe, like constant currency, so we've done about 3% top line growth. So what I'm trying to understand is it largely because of the weather in Europe, or what I'm trying to understand is have some of the players got back? Because last quarter what we mentioned was, we've been able to, our model was agile, we've been able to do it DIY and e-commerce. So that helped us in the last quarter. So what I'm trying to understand is, have the other players got back some share, or what is it?
The business was quite slow last quarter, Mr. Jain, if that's your question. Sorry, I couldn't hear you very well, but the business was slow on account of huge snowfall in Europe that happened last quarter and paralyzed the market completely. But Parador has still been able to continue the business. Other companies, I don't think, has been able to do as well as Parador.
Okay, all right. That's about it. Thank you so much, sir.
Thank you so much, Mr. Jain.
Thank you. The next question is from the line of Anish Jobalia from Banyan Capital Advisors. Please go ahead.
Yeah, hi. Good evening, sir, and thank you for the opportunity. So at the cost of repetition, sir, really good to see great numbers this year and before. Just wanted to understand from the Parador perspective.
Mr. Jobalia, if you can speak closer to the handset, please.
Yeah.
Your voice is...
So, is my voice audible now? Can I speak now?
Yes, sir.
Yeah. So
go ahead.
Parador, sir, I just wanted to understand. You have been earlier in the call you mentioned about 10% growth and 10% margins. So given the headwinds that we have been facing in the business, bit as you mentioned about Q1 and a part of Q2 also, and also the fact that in the last year some of this demand was also driven by people staying more at home. So there's a possibility that they might start moving out more as compared to last year. The spending on homes might come down. So do you think that we can still grow at 10% in the next year on the base that we have created for FY21, and also the fact that the investments that we have been making into the joint ventures and new initiatives might still take a bit more time to fructify?
Aniji, I'm not able to at all project how COVID is going to span. At the moment, it seems that COVID is relaxing in Europe, so which is good news. I don't think there is an issue on demand for the European segment Parador at the moment. As we speak, it's more about delivery because we have a problem with the material availability, but it is only a few months issue. So if you're looking at a bigger scale for Peridot, nothing is changing. We are absolutely moving full ahead. Maybe in a quarter or so, the growth will be muted on account of that. Also, the team is working on. I'm not saying it will be muted. I'm just saying the team is working extensively. We are going to do far more outside Germany also. So the market won't be an issue at all if we can sort out this material issue, which is a few days back news to me, and while I was reviewing with them, and I thought it transparent enough to inform all of you. The team is working on it. I don't think the year will look at anything different than last year. We will continue to grow. We want to take Peridot to 350, 300 million, and if we have to reach 300 million, we have to do all of that.
Right. And sir, one question on the roofing solutions. What I understand, the industry, grows for during the good times, and then as the monsoon comes back, then it declines. So overall, the industry growth is not very high, maybe around 3 to 5%. So in the last year, we did very strong volumes in this business, and also there was a demand-supply mismatch, especially in the Q1, where we were able to do better than the others. So I have two questions here. That this time maybe the competition is also equally ready with their products, their inventory, to be able to compete with us in Q1, where we had a lot of advantage in the last year. And also the pricing, as you already mentioned, that it's grown by 8%, the realizations, right, over the last year. So can that also come under pressure because the competition being much more normal in this year as compared to last year? So overall, how does
the answer to both your questions is no. I've answered this before. Let me just repeat for the sake of everyone else also. We have gone into far more penetration in our sales, and the customer base has been walked through. We are doing a lot of digital customer acquisition. We are getting into heat maps. We are getting into PI tools. We are doing the PIN code mapping. I think that's going to hold us good from a way of tapping market. Our competitors may be well prepared. They are great guys, but we will find a way to better them. That's all I can say. We have a team which you will trust on, and that will continue to deliver, sir. On market prices, they are all dictated in the market, but we are number one brand, and we always are the best in the market, and we'll continue to get our premium over the rest. So we have never been dependent on the smaller companies to decide our NSRs. We decided based on our brand. So I don't think this division has anything to do with it. Provided pandemic doesn't go on for 3 more months and closure of the country doesn't go on for 3 more months, then neither you nor I have a control, sir.
Right. Okay, sir. Thank you so much for your answer.
Pleasure.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference back to the management for closing comments.
Thank you very much, everyone. It has been wonderful once again speaking to all of you. As you can see, we are always very transparent with every company, and we want to continue that with you. This is your company. You can trust us fully. We will not let you down. There will be headwinds here and there, but the team knows how to handle this. I'm confident that you will get satisfactory performance from your company, HIL, from quarter to quarter. All the best to you. Stay safe, and thank you once again. If you have any other questions, please reach to our investor relationship desk, and we can fix a call even with me at any time at your convenience. All the best to you. Thank you. Bye-bye.
Thank you. Ladies and gentlemen, on behalf of HIL Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.